Welcome to the Spreadex Financial Market Preview for Monday, 17th of September. And we're looking ahead particularly at Kier Group here. So got full year figures coming out on Thursday.
Yeah, sort of a tough year for Kier Group so far. I think it's down around 10%. Sort of the construction and services sector was dealt a massive blow with Carillion collapsing in January. That sort of set the tone for the year, really. I think Kier saw some really wild movements in January. I think like £9 lows and £11 odd highs within like a week period, basically. It was sort of all over the place. More recently, it sort of settled into a bit more consistency. Sadly, consistently bad. It's sort of just been slowly, gradually falling towards the £9 mark. At one point, I think it hit like 880, which was its worst price. Or maybe 820, sorry, its worst price since late 2012. So things aren't great at Kier at the moment. It did, however, release a fairly important update back in July. It announced its future-proofing Kier update, sort of its new sort of streamlining and efficiency plan. Obviously, future-proofing isn't necessarily the most optimistic title for it, but still, at least it's taking the steps to protect its business in a way that Carillion didn't, and obviously to great detriment to that company. I think it said that it was going to be focusing on, I think it's infrastructure services, business building, and developments and housing. So that'd be sort of three core pillars of the company, with it's going to dispose of non-core assets and things like that. Beyond that, there wasn't really a lot of detail to the plan. I think that's going to come on Thursday, so that's really going to be what dictates how investors react and how the stock performs on Thursday, would be it how much detail you get and sort of how investors take to the plan, really. Broadly, I think the plan itself, the announcement itself back in July sort of garnered some slight positive reaction, but it wasn't enough to sort of stall the stock's gradual decline over summer. So it'll be interesting to see whether it can sort of generate a bit more sort of wholehearted positivity and lift it back above £9 and sort of cause it to recover the losses sort of it's incurred in the last few months. In terms of what our clients are doing, they are buying around that £9 mark. Like I said, it hit lows not seen in basically like 5.5 years. So I think our clients might be looking at that as a point of entry to Kier at the moment, heading into what will be, I guess ideally Kier Group will be hoping it is the start of a new era for the company, sort of escape the shadow of Carillion that sort of spoiled the first half of its trading year, really, and use this sort of the further announcement of the future-proofing plan as sort of day dot for its now trading year for the second half of 2018.
So hopefully some learnings from the Carillion.
Yeah, fingers crossed. I think investors will be looking for signs that Kier has picked up on where Carillion really went wrong and is looking to correct that with this new future-proofing plan.
Okay, thank you very much.